All right, let's start off with this right here. So Bank of America, you're a big consumer bank. Your core business is consumer deposits. You get about half of your revenue from that when it comes to net interest income. That's the spread between deposits and loans, the money you make on those loans. Why would you want people putting their money in investment accounts instead?
Yeah, fantastic. Look, you think about what's important to a client and how do they achieve their goals long term, and that's really what we're all about, is how do our clients achieve long-term goals. And for us, it's about banking, lending, and investing. And that's been the North Star when we started consumer investments 10 years ago, which is making sure our clients have access to all three. So we have fantastic relationships from a banking standpoint, but clients say to themselves, I want to save for retirement, I want to save for my child's education, and so you got to invest for the future for that, and we want to make sure they had access to it.
Oh, we were looking at the growth of accounts over the last 10, 15 years or so, now almost 4 million.
Yeah.
So I want to go back to the accounts and specifically the younger people that you have investing with you, about a third Gen Zers or millennials. Why are you, it seems like you're targeting them. Are you targeting them? Why do you want to get them from just being savers into investors?
Yeah, well, first of all, I'm certainly very proud of the team, and it's a great day for us to sort of hit the 500 billion mark after 10 years, and so a real shout out to my team. They've done a hell of a job. But, you know, for us, we always have clients across the entire spectrum of age, but young investors are important because for us, it's always been about financial education and about helping young people understand how to think about long-term goals. So we've always been directed by the idea that it's not about gambling or about short-term quick hits. It's about long-term investing, being diversified, and thinking about how investing is part of a broader financial picture. How do we make their financial lives better? So to do that, you got to think about, you know, what is the goal that you're setting for us and what's the time frame? And so we really work hard with our clients to set those kinds of parameters as opposed to just trading.
All right. So as we all know, if you start earlier, you have more money just through compounding.
Exactly.
I want to go to AI. So some of these people are working with robo-advisors, which I'm assuming aren't a robot. It's really just AI.
Right.
How are you using AI to help them? How does it differ from some of your other clients, or is it different?
Yeah. So in 2017, we launched something called Merrill Guided Investing. We then sort of enhanced it in 2019 with Merrill Guided Investing with an advisor. And so what's unique about us, one is when you go online and you use that offering, the investments, the portfolios that you actually get to invest in are all generated by our chief investment office, the same team that works with the Merrill Lynch high net worth clients and the private bank high net worth clients. But it's effectively creating portfolio management, right? And based on your parameters, risk, return, a whole series of questions that you're asking, then we use the portfolios created by our team, and it brings it together. And it does it in a very efficient way, a very low-cost way. We also say, hey, if you want to talk to someone, you can walk into one of our financial centers, right, 3,800 centers across the country, and actually have someone to say, hey, is this the right model? Am I thinking about the right way? How does this fit into a broader picture? So robo is probably not the right term. It's digital.
It's on your website.
It's right. It is a digital model for sure, and it's a great model, but we certainly incorporate the human element.
Can I ask you, when we're talking about robo-advisors using AI, however you want to describe it, in general, which way are they pointing investors? Is it index funds? Is it individual stocks?
Yeah.
Will these robo-advisors advise people to buy things like Bitcoin?
Yeah. Well, no, not for us, certainly. And again, the way it's advised is based on how you answer certain questions. You're setting what is your risk tolerance, what's your time frame, and then we have about 25 different portfolios that have been constructed that have either from conservative to a little more aggressive. And so it really gives a real range of choices. And then, of course, it's about constantly evaluating it. Every client is asked to look at it once a year to make sure it still fits their parameters. And so that model is great. We also have a self-directed platform, and that's where clients can make their own decisions, but we provide a ton of research.
All right, so very interesting program there. I want to talk more broadly about the business. You oversee a big part of Bank of America's business, consumer banking.
Yeah.
Today, we have a big report coming up, the jobs report. The expectation is 4% wage growth year over year. What does that mean for that core business, the banking, saving, checking account business? Yeah,
well, Fred, it's great that clients and customers are still feeling pretty good, right? We still have elevated deposit levels from where we were pre-pandemic, right? While they come down a little bit, they're still 9–10% above where they were pre-pandemic. We're seeing in our card charge-offs, it's plateauing, so people's credit is in a pretty good place. There's a lot of capacity with people who have home equity loans that they haven't used in a while. So generally, and then of course, unemployment at 4%, it's just strong. So we're seeing the spending levels, all signs point to a fairly strong consumer, which will help drive a strong economy.
And we're almost out of time. I need a very short answer from you. We have a Fed decision coming up later this month.
Yeah.
Does a pause, does a cut, I mean, does the tone, does that impact your consumer banking business at all?
Look, everything affects everything, but the reality is where interest rates are, if they come down a little bit, then there's a little more benefit to the mortgage business. If they stay up, that helps them in other areas like their savings and other accounts. So there's benefits to both sides.